Do you need long-term care or should you just self-insure? That's what we're going to be talking about today. It's really going to be a complete guide to long-term care insurance, whether or not you need it, what to think about when it comes to considering long-term care so that by the end of this video, you have a very clear sense. Should I have long-term care policy? Do I not need to even get a policy? Should I self-insure instead allowing my investments to keep growing? Or does it make sense to get a policy? And if so, what policy? All of that and more is what we're going to be talking about in today's video. As a reminder, my name is Ari Taublieb. I am a financial planner and I help people retire early. So when we think about long-term care, there's a lot that comes to it, but too often people don't focus on the alternative, which is, what if you don't need long-term care? And I know that sounds odd because the basis of this video is when do I need long-term care, but here's why I'm bringing it up that way. When you think about long-term care, it's actually a fairly basic calculation. Do I imagine that something could happen to me? The reality is, for all of us, the answer is yes. The question is, how do we best prepare for that? Now, I know it's not always fun to think about, but what we do want to make sure we're doing is everything we possibly can to save every dollar, or at least to consider what are the trade-offs that come along with it. So number one is when it comes to long-term care, should I buy a policy? Should I self-insure? Let's first understand what that means. Well, buying a policy can be very expensive if you're in the latter years, call it in your 50s and 60s, because they are going to say, we know that we can charge you a higher premium, therefore you're going to be paying us more dollars so that you have this insurance that you may never even use. Now, that makes it sound like I'm against long-term care insurance, which I am not. As a fiduciary, all that means is I'm only ever paid by clients who continue to see value. So for you or any listener of this show, really a viewer is what I'll say, because I also have my podcast, Early Retirement Podcast. What you need to think about is, okay, not just does it make sense, but does it make sense for your situation? Specifically, when it comes to long-term care insurance, what you need to think about is, do I need it? And not just do you need it, how can you best fund it? Because too many people, in my opinion, do not even consider self-insuring, which is the whole idea of, as opposed to paying premiums to a company where you may not ever even get to use that premium. You may never even get to use the value of that insurance policy, which, as a reminder, that's what insurance is all about. When you buy insurance, you are really hoping that you don't end up ever needing it. Life insurance, you don't want to pass away. If you do, you want to make sure those are taken care of. Similar here. Hopefully you never need it, but if you do need it, you want to make sure it kicks in. Well, what if you could have it kick in, but by self-insuring it? So instead of paying those premiums every single month to a policy, call it $500 a month, well, let's just assume that for a basic example. That's $6,000 a year. So let's say that you do that, and for 30 years, you've put in $180,000. Great. How much coverage does that get you? That's what we want to understand. And not just how much coverage, because a lot of people will stop there. We want to understand, what will that cover? Now, on the other side, if we look at, okay, what about just actually if we self-insured? What if we didn't get a policy? What if we didn't pay those premiums? And let's just pretend there wasn't a significant health event, or you determine that family is going to assist you, or you determine that all of a sudden there's someone that you want to make sure can take care of you, and because of that, you do not need that policy. Well, if that's the case, that $180,000 in my previous example, $500 every single month for 30 years, well, that could have been going to you. And let's assume that you get growth on that as well. And let's just take 10% as an easy growth. Well, right off the bat, that's about $1 million that you would have in your account to be able to either spend on health expenses, or you could say, you know what, I could use those to do more charitable giving. I could use that to travel. Now, if you're in your latter years, you might want to say, hey, it's no longer me traveling, but I want to be able to fund it for my children or my grandchildren. And we have conversations with clients of mine about, hey, what makes most sense? How do we consider this? But that's what I want you to think about as I'm explaining, okay, self-insuring and a policy. What makes most sense for you? Long-term care can be as basic as a family member taking care of you, or you being taken care of by a spouse. It can be you're at a living facility. It could be a nurse is taking care of you. It all falls under that umbrella of long-term care. There's, of course, unpaid long-term care, which is family and friends who will either help you with bathing, which I know sounds really odd to discuss. It can help with using the restroom. It can help you with all of these things. And that's, as I said, unpaid, oftentimes family or a friend. There's also a paid homemaker service where they're actually helping you with household tasks, and going to www.genworth.com can give you a good sense of what you can expect in your area if you were to go through a process to see if that makes most sense for you. There's adult day healthcare, which many people don't consider, which is when essentially you still live at home, but you go to a facility during the day, either for stimulation purposes, either to get fed, or you just want, hey, I want an easier lifestyle and that's more attractive to me. So it's not as if, okay, am I all completely at home or do I have to commit to this facility? No, there's often a middle ground that people don't think about. There is indeed an assisted living facility where you are not at home and you are getting care by being at this facility. And lastly, there are skilled nursing facilities where you go to a facility, but it's not just your assisted living. It's when you're looking for individualized treatment based off of your health needs. Now, these are generally most expensive, and for transparency of what you understand what that looks like, I'm here in Malibu, California. If you wanted to come here, well, the reality is you're going to be spending between $14,000 to $18,000 a month, and the average stay is about 5 months. Yes, I have a few clients who have shared that with me, and it's not cheap, but what you want to understand is, okay, do you need that type of coverage, or can you find cheaper coverage that still gives you what you need? And I don't love the word what you need, but really allows you to say, yes, I would be comfortable. I now want to go through a few notable statistics as you're thinking about long-term care. Someone turning 65 today has a 70% chance of needing long-term care of some sort in the future. On average, women need long-term care for 3.7 years and men need long-term care support for 2.2 years. In 2017, a study was done showing the average lifetime need financially for long-term care was $172,000. So on average, that's what people want to make sure they have set aside, either by self-insuring or having a policy that covers that. A few things to consider here. Could selling your home be your long-term care policy? More often than not, it plays a more significant role than you may think. Having that extra protection, even if you never need it, knowing that your home could be that asset could be wonderful. Peace of mind is underrated. Making sure that you have different pieces can add tremendous peace of mind, which really adds to your quality of life. Do a calculation. Understand what amount of coverage you believe you would need that would provide that stability in terms of peace of mind. What amount of coverage do you want to make sure you have knowing your health situation? Are there family? Are there friends that would help you if something occurred? If not, do we want additional coverage? What are your health expenses? And understand, if you were to go through a process to get a quote and see what that premium may be, what if you invested that otherwise? What if you got your own growth? What if you self-insured? Do you feel that would still provide enough coverage? If you take anything from this video, I hope it's that whether you determine you do want a policy, whether you determine that you want to self-insure, whatever it is you determine, I hope that you understand having a plan is the key here. That anxiety, that I don't know phase, as I call it, that comes when you don't have a plan. Once there's a strategy in place, you have confidence, and that confidence allows you to go through your life without worrying about, hey, what if something happens in the future? What if something happens sooner? Am I protected, or are those around me going to essentially have to pick up the slack? Do you want to be a burden? I imagine the answer is no, as for most of my clients, which is why when you come to long-term care planning and how to think about it, there's more options than you think. Another key thing that's rarely discussed, many people will say, Ari, I have $10,000 a month of expenses, and now I have long-term care on top of that. How am I going to pay my bills? The reality is that those main expenses, the $10,000 a month in this example, those primarily go away because you are now in assisted living. You now are having long-term care costs, which yes, can be expensive, can be significant, but it's not on top of the expenses that really you are living off of because lifestyle has changed. Please know that when you buy long-term care insurance, that policy will not pay you forever, meaning there will be a cap to how much coverage they will give you. That policy will pay a fixed amount per day for a certain period of time. Taking an extreme scenario, if you have a long-term care insurance policy and you have a bill of $500,000, well, it might not cover that entire bill. That's why we need to understand what makes most sense for your situation. Now, if you're thinking about long-term care insurance and you determine, yes, this is something that would provide tremendous peace of mind and self-insuring doesn't make most sense for you, consider buying between the ages of 55 and 62. That is the average where it makes most sense from a premium perspective and ensuring you get the right coverage. The earlier you do it, the less expensive it'll be. The trade-off is that it's going to be longer, meaning it's more years that you are paying it. Look at your income sources. If you have Social Security, if you have a pension, if you have rental income, if you have your investments, do you also need to pay for long-term care insurance? Or is that sufficient so that if something occurs, you have proper coverage? I would rather see, if that's the case, you pay yourself as opposed to an insurance company. Do you use your home? Once again, a home can be a wonderful thing to have in your back pocket. That equity can be used to go and pay for long-term care needs. Lastly, take care of yourself. Your health is important, and making sure that you are taking care of yourself by sleeping well, by drinking enough water throughout the day, by going on walks, by getting regular exercise, by being nutritious, well, those things can, of course, greatly enhance your ability to live your best life. Now, if this video was helpful at all, I do kindly ask that you like this video, that you subscribe for more videos like this, and that you share it with a friend. It is more fun to retire with friends. And lastly, this is what I do. I help people put a strategy together to think through, not just long-term care, but investing, how to save on taxes, how to make sure they have a plan that they're really confident about in retirement. You can see all of that and more in the description below or visiting our website, rootfinancialpartners.com. Thank you so much for watching today's video. If you don't know, I am the host of the Early Retirement Podcast, and this is what I love doing. I help people create a custom strategy to retire early. You can always reach out to me or a member of our team here at Root, and we would be happy to walk you through our planning process to show you how we can help you get more life out of your money.